Hello guys, have you noticed the big NFT news that dropped in the last month? Bored Ape NFT floor price literally doubled in just 30 days, jumping from 5 ETH all the way to 10 ETH, almost $25,000. Social media and crypto groups, chats, all are lighting up again with excitement. And at the end of last month, JPEG caught the attention of a fresh wave of NFT players too. So, are NFTs actually about to come back to life? Hold on a second. Don't get too excited yet. Let me finish what I have to say first. Do you remember how insanely crazy NFTs got back in 2021? Celebrities were fighting to buy them. Justin Bieber grabbed a Bored Ape for $1.3 million if I recall. Paris Hilton bought one too. Post Malone paid the same $1.3 million, exactly like Bieber. Steph Curry dropped $500,000 on a BAYC avatar. And what happened next? How much are those avatars worth today? The floor price sits at 10 ETH. We just said it. Roughly $25,000. Curry's $500,000 purchase is now worth less than a tenth of what he paid. Bieber's $1.3 million ape has crashed more than 99%. Celebrities lost millions. And if they couldn't exit, what chance do retail buyers have? Okay, and now I'm going to share an even more painful truth with you. This recent doubling might not be as straightforward as it looks. Back at the 2022 peak, the BAYC floor price was over 150 ETH, nearly $400,000. Today it's sitting at 10 ETH, $25,000. That's a drop of more than 93%, which means the vast majority of people who bought at the top are still deeply underwater, down over 90%. So here is the real question. Who exactly is buying and pushing the floor price from 5 ETH back up to 10 ETH this time? The data shows up something completely counterintuitive. Trading volume has not kept up at all. Price went up, but volume stayed weak and thin. In traditional markets, we call that a low volume rally. In crypto terms, that's not a bull market. That's a liquidity trap dressed up in a party hat. It looks festive on the outside. Yes, we have people excited, but the people inside are just trying to save themselves and nobody's actually making real money. So who's actually doing the lifting? After 9 years deep in this industry, my best read is this. It's most likely the big whales fighting their own NFT debt defense battle. A lot of major holders pledged their BAYC into lending platforms to borrow ETH. When the price fell all the way to 5 ETH, they were literally one step away from liquidation. So what did they do? They quietly coordinated with a few other big players, bought from each other hand to hand, and pushed the floor price higher. They weren't trying to attract new retail buyers. They were simply trying to protect their own positions from getting forcibly liquidated. They are not buying the narrative. Sorry, they are defending their collateral. This is pure financial self-defense, not some cultural revival, not some NFT summer coming back. So now, do you see what's really going on? When you see the headline, floor price explodes, it's pumping. The first question you should ask yourself is simple. Is real new money actually buying? Or is it just existing capital trying to save itself? The answer to this question will completely change your entire strategy. And what I'm about to say next might sting a little, but I've watched way too many people lose money because they refuse to accept this reality. So I have to say it anyway. Why were blue chip NFTs so valuable back in the day? Because they were basically digital Rolexes. You slapped a monkey avatar on your Twitter, and people instantly assumed you were a tech insider, on-chain player, rich, stylish, someone powerful, someone that has influence. That social premium was the real foundation of PFP value. But what about right now? In the broader Western online conversation, rocking a monkey avatar on Twitter no longer signals that you are in the circle, that you are part of it. You are far more likely to get labeled as a bag holder instead. So that's counterproductive. Flexing with a JPEG in 2024, that was so 2021, nobody cared already. It's even worse today. And this isn't just my personal feeling. After running around to industry events for so many years, the clearest change I've seen is this. In 2021, everywhere you looked, there were monkey avatars. By 2023, they started disappearing fast. And after 2024, up to today, they've basically vanished. This isn't just fatigue with the aesthetics of, those kind of NFTs of pictures, JPEGs. This is a total shift in identity signaling. When simply holding an NFT stops being a status symbol and instead becomes the mark of a bag holder, the market loses its most important source of new users. No new buyers coming in. Only existing holders trading among themselves. That's the harsh reality blue chip NFTs are facing right now. Think about it for a second. It's pretty terrifying, isn't it? And at this point, you probably think I'm about to write a tombstone for the NFTs. NFTs are dead. Or say something like that. Not at all. NFTs are not dead. But NFTs as flip cute little pictures. Those are definitely dead. Meanwhile, NFTs are tools for proving digital ownership might actually be entering their next real phase. Let me share a few directions I genuinely believe that still have real potential. First, the digital artifacts route. What Bitcoin ordinals are doing, treating inscriptions like digital antiques with real historical value and archaeological meaning. This isn't speculation, it's a completely different narrative. The hardcore tech crowd in the West is already taking this direction seriously. Ordinals are not PFPs. They are timestamps of the digital world. Second, AI agents. Right now in Silicon Valley, this is one of the hottest concepts. In the future, AI will have its own crypto wallet. The bots will have their own crypto wallets, and they will need to trade virtual assets, copyrights, IPs, data usage rights with each other. NFTs will become the natural proof of ownership between AIs. Whether the story fully plays out, we don't know yet. But this vision is real and it's getting implemented today. And third, the most important one maybe for, this year, RWA, real-world asset tokenization, real estate, government bonds, high-end wines, all these real assets moving on-chain. NFTs are the most natural carrier for them. This is a utility narrative, completely different logic from the old buy a picture and hope it goes up story. Yes, it's finished, definitely. And you'll notice that a lot of the new protocols right now are actually trying to solve the single biggest fatal flaw NFTs had in the past, liquidity. Because yes, why did traditional NFTs become so hard to play? Because getting in was easy, but getting out, that was the brutal part. You could list an NFT for months and still have nobody buy it. On the surface, you owned a high-value asset, but the moment you actually needed to exit, you realized nobody was there to take it off your hands. So some of the newer structures are now trying to reshape NFTs to behave more like token markets. Take the JPEG protocol I mentioned earlier as a perfect example. Its biggest change is that it lets NFTs plug into something like a DEX liquidity mechanism instead of just sitting on OpenSea waiting for a buyer the old-fashioned way. In plain English, some NFTs in the future are going to trade among as easily as tokens instead of sitting listed forever with zero action and just wait and pray for it. For someone to buy it. That is the part I believe is truly worth watching. Because as a pure speculation tool, the NFT story, yes, it's over, I've said it. But as digital asset infrastructure, NFTs might only be just getting started. Alright, today I walked you through the whole picture, so let me wrap it up in 3 quick sentences. First, this floor price doubling is far more likely a big whale debt defense operation than the start of a new bull market. Maybe it's just one player. When you see the headline, don't get excited. First, ask yourself who is actually doing the buying. Second, the pure PFP social premium narrative, it's dead. Yes, it's dead. If for you NFTs are that, NFTs are dead. Because these kind of NFTs without new user flowing in, it's extremely hard for the market to have a real reversal. Even the celebrities got crushed that badly. Do you really think retail, me, can somehow reverse the fate, the fate of those NFTs? And third, NFTs as a technology tool are not dead. And for them, it's just the beginning. They will find new use cases and applications, but the era of everything can be an NFT, yes, it's gone forever. That's my vision. I made this video not to discourage you. Maybe it's a bit discouraging if you are still holding the old kind of NFTs. But yeah, it's because I genuinely don't want to see you guys get harvested over and over again and get back in this market if you are not in it anymore. The information gap in this industry, in the crypto market, it's huge. What the news shows you is only the surface. I'm here to break down the real logic underneath. That's the whole point of what I create, of the videos that I'm doing. If you are curious about the JPEG I mentioned, I'll drop a full dedicated video explaining it completely in the next one. And if you enjoyed this video, please drop a like, leave a comment, share it with your friends. I'll see you in the next one. See you guys.